Good morning, everybody. It's a pleasure to be here this morning, the 23rd day in the month of August 2022. My name is Heritage Adisa, Markets Analyst at HFM Nigeria. And as always, we check through the markets, figure out what the overall sentiment is, if it provides opportunities, and then how we can take advantage of it. But please do remember that this is just a communication material. And nothing in this communication contains or should be considered as investment advice or an investment recommendation. Users acknowledge that investment in FX and CFD products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which the users are solely responsible and liable. Now, what we have this morning in terms of the overall environment is still that overall negative flow that we've had over the last couple of weeks. Sessions, we also had it in yesterday's session as well, and in today's session is not any different, although the moves are marginal, tentative, tentative as bets, but at best, but that overall negative flow still remains very much evident. Now, in terms of new catalysts and new information, well, there's not really been so much. Yes, one from Saudi Energy Minister, where he said that OPEC Plus may need to take action to try and help stabilize the oil markets. Apart from that, there hasn't really been any major catalyst, and markets are really looking forward to the Jackson Hole Symposium that starts later this week from Thursday up until Saturday. So until then, there's still that overall lackluster performance really evident in asset classes, and then we're going to delve through it right now. So I said sentiment remains down this morning, but then intraday moves are marginal, right? Are so small. Heading into today's European session, the overall market environment remains negative, like we've seen over the last couple of sessions. Right. And what are the reasons for this? Well, there's been concerns about the state of the global economy, right? With recession fears really in everybody's faces. Energy crisis from the Europe side as well, still remains, and it's even worsened or has worsened the overall inflation problem. And then you have the recent Fed rhetoric ahead of the Jackson Hole Symposium. So we have that. Then you look across the asset classes, equities hold on to the losses recently, right? Although you look at the margins so far today, it's still a bit small. So there's that to pay attention to. As of time of writing, US 500 futures contract has really not moved anywhere, basically still at unchanged levels, right? So there's also that to pay attention to. Yes, overly pressured, but that intraday flow still gives us a bit of caution, puts a bit of caution into the mix here. Oil prices now are a little bit slightly supported in today's session, right? And this has been on the back of reports or comments from the Saudi Energy Minister, where was said that OPEC Plus may need to tighten out, may need to slow down output, reduce production to try and stabilize oil market. So there's also that lower supply, better oil prices. So there's that to pay attention to. As a time of writing, oil prices were up. US oil particularly was up by 1.50%. Now it's just up by 1% thereabout, but just a little bit elevated, but not so much there to read into. Bond yields mixed, measures of volatility are remaining elevated as well. So there's that. On the currency side, well, the safe haven Japanese yen still leads, topping the majors in this risk of environment that we are having, so far. Oil prices have also helped the CAD to also be amongst the major, strongest majors so far today. And the dollar still being king and still benefiting the most from the overall environment that we've had over the last couple of sessions, still amongst, the strongest currencies so far today. On the other hand, on the weaker side, the euro remains pressured at the laggard amongst the majors. The pound remains pressured, and that's not really been a surprise. It's been like that for a couple of days now, and that's because of number one, the energy crisis, looming recession, fears as well on both sides, right? Those are still big negatives for both currencies, and they remain pressured as well into the session. Now, one thing I want to also pay attention to is, like I said, the moves this morning are still marginal, right? And you more or less see that tentative, unsure, not so strong, flow in the market. So that means that you should also be a bit more cautious in terms of your approach, right? Because markets are really looking forward towards the Jackson Hole Symposium to hold in Wyoming. So there's also that to pay attention to, because it should provide further clues about the Fed's part going forward, particularly when markets break down the comment or the speech from Fed Chairman Jeremy Powell. So there's that to pay attention to. But in the meantime, That negative cloud remains as markets focus remains firmly on sentiment and the dollar, as most of the current factors remain a supportive factor for the greenback. What are the factors? Chinese economic slowdown supports the dollar, the euro pressure supports the dollar, the Fed rhetoric supports the US dollar, right? Global economic slowdown supports the US dollar as well, right? So all of this have been a positive for the dollar, and then there's that to also pay attention to as well. The fear and greed index has fallen further. Well, still within the neutral territory, but it's lower compared to yesterday, down about 5 points. And then in terms of strengths and weaknesses, JPY card USD strongest, but not by the largest margins. None of them have hit the 0.40 threshold that we like to see in terms of gauging a significant move in FX. So there is that to look out for. And then on the weaker side, Euro pound still pressured. AUD is also pressured as well in today's session. Well, Euro USD broke through parity yesterday and has even fallen below 0.9950, right, in today's session as well. There's really it's really tough to find a good thing going for the euro right now. I mean, there's so much negatives around the euro, while the dollar, on the other hand, has at least better outlook. So weakness on that pair still remains, even though it's now at low levels going back to maybe 2002, way back. So I mean, that's really low, and we could get pullback retracement, but haven't cleared through the 1.000 level. I mean, the next support level is way off that level. So is that to pay attention to. Euro JPY is also lower, broken through 136.5, and then also looking pressured as well towards the downside. For the day ahead, PMIs are basically, what's loaded on the calendar. Later, I think a couple of minutes from now, we just even got the UK PMI data, and then we'll have US PMI data later today. And ECB member Planeta would also be on the wire. So all in all, that negative environment still remains. It's just that, the flows are a bit tentative so far today. And then, the moves are marginal. It's not really giving us high conviction to try and jump into what we're seeing. Jackson Hole Symposium could be the main focus for the rest of the week. And that really, would, tailor markets, perception markets, movement, tailor markets behavior towards the end of August. Now, quickly looking across the equities for a picture of what we are saying. This is the US 500, right? Basically at flat levels. I mean, from where we started to where we are right now, we've not really, we're back to flat levels, right? Still, meandering around this for the 150 level. It's not really giving us so much to work with. Yes, we dipped lower, but then we've paired those losses, right? And then we are there. But overall, you look at the overall movement, you see that pressure remains, right? It remains, and this is also an interesting level to look out for, especially when you look at how much we traded around that level going back to late July and early August. So it's also a key level to pay attention to. Weakness in the overall market environment remains a negative for equities. But guess we'll have to see how that plays out, going forward. And then it's basically the same story across the other equity spaces. Oil prices just a tad supported, just a little over 1% in terms of upside, but we'll see how that goes for the VIX as well. Elevated not so long, and now we're seeing pressure. So you're seeing that whole back and forth push and pull in markets, and that says that you should also be more careful. It's one of the things that we said, during the morning show yesterday on radio, where we said it's not just about an opportunity. Yes, we're seeing the risk of flow overall cloud, but it's more about how convincing it is and how much conviction you have behind that trade idea. And right now, I'm not really feeling a big chunk of that. Now, KJPY being strong and strong today. I mean, you're seeing a lot of back and forths in terms of the flows today. But looking at something like GP versus JPY, for example, let's just clean this up a bit. So far today, we're seeing it downside, we pulled back heavily to the downside. We retested 161.5. Now we're working our way lower as well, right? Interesting level to look out for there because I mean it was also a very key level going back to I think 11th of August. So an interesting one there, but in terms of convictions, it's just a bit tricky. And then you look at Euro JPY, similar story there as well. Let's see how to clean this up. Mistake. So check this out. All right. Now, so Euro JPY, just clean this up as well. And then you look at this. Now, like I said, we broke through, let's say, we broke through yesterday's lows around this key 136.5. Now we retested that level and now we're pushing lower as well. This could be interesting in terms of looking to retarget. The next key area of support on this one would really come in around, where's 135? I think this is the next key area of support, this lower point for last week. So I think that will be the next key area of support to look out for on this particular pair. But that's what we have in terms of the flows. Um, you look at even Euro USD. Finally, let me just look at that one and then we'll call it a day. Euro USD. All right, so Euro USD as well. Also an interesting one to look out for. Yesterday, you broke through parity level, and the last time we were at that parity level, really, the last time we traded around that area, right, was way back early July, and we really couldn't break below the level. Now we eventually broke through it, and now we're trading below this key 0.995. Now, what's really interesting about this level is we're retesting it and then we're pushing lower, and then after this level that we are right now, right? Yes, we could say that the downside we've seen in Euro USD has been for quite a while and it could really pull back. But having cleared this level, we're not having so much need for positive, so much upside potential for this particular pair. The next time or the last time we were around this level was way back in 2002. And after this level, really, the next area of support comes really, really, really low. I mean, it's far off. We could say, okay, maybe this lows, right? Early, around May. Is this May? I'm sorry, August of 2002, right? Now, around that level is still far off where we are, as at today, right? So there's a lot of room to the downside. And if, the catalyst, the sentiment that we currently have remains, the energy crisis continues to loom, gets worse, recession fears increase, Fed comes in even more hawkish. I mean, there's a lot of room to the downside on this particular pair. So there's also that to look out for. Like I said, on the calendar today, like I said, it's just PMIs mostly on the calendar, ECB for later, on schedule. Let's just reload this. All right. We had Eurozone PMIs coming a bit mixed, some weaker, right, some better than expected, just a bit of ups and downs, but not really providing so much, to latch onto, right? Services PMI was a bit better than expected, but not as good as the previous numbers, but even the manufacturing sector really came out lower, especially with the composite as well. So it's just going to be the US, the one for the US, and then EC planets are really on the wires. But it's one of those days where you want to be more, more cautious, more just patient, right? And then just wait for something better to develop. I think the market environment, yes, being negative, still doesn't give us that much conviction that I would really like to see before delving into the flows that we're seeing in the market. So that's it for now. Thank you very much. Please do not hesitate to ask if you have any questions whatsoever, and we'll always do our best to help out. Thank you. Do enjoy the rest of the trading session. Bye for now.